Financials are the worst performing sector right now. A lot of pain there, especially in the regionals and especially tied to the West Coast banks. Crypto bank Silvergate shutting down, announcing it will wind down operations and liquidate in the wake of industry and regulatory headwinds. CNBC reporter Tanea McKeel joins us now. She covers crypto for us. So, Tanea, it's good to have you. Explain how Silvergate became the latest victim of the crypto collapse and what the spillover effects are.
Thanks, Sarah. Great to be here. So this is just the next step in the FTX saga. FTX was a big customer of Silvergate, which really became the go-to bank for the crypto industry over the last decade when a lot of other banks saw the crypto industry as a little bit too risky and didn't want to take their business on. The latest hit, shares down more than 30% today, and that's just the latest for the shares this year after we saw massive withdrawals earlier in January. A lot of regulatory and government investigations into Silvergate's relationship with FTX. Not surprising for the crypto industry, though, which has seen this coming for about a week, and you can see, the news is barely hitting the cryptocurrency prices in Bitcoin and Ether.
I've been watching the crypto space price action this morning. It's interesting. A couple of dissection pieces this morning. Sheila Bair, former FDIC chair, argued that it's not so much about crypto, in her view, as it is about traditional risk in banking, meaning lack of diversification or mismatches in your maturities. And I wonder, could this have happened if it wasn't crypto, if it would have been something else?
A lot of people have made that argument, Carl, that it's not about crypto. If you're a little bit too concentrated in one industry, it's bound to happen anywhere. And this is the problem with not having other banks available to bank the crypto industry. Like I said earlier, regulators are kind of coming down hard on crypto businesses in the aftermath of FTX. And that kind of pushes large banks away from wanting to take on risk like that. And then that moves on to the smaller banks, which might have a harder time and a lot more to pay in order to keep up with banking that industry. And it would also welcome a lot of what regulators are trying to avoid, which is a lot of concentration in one area.
On a day where certainly regional financials are getting hit pretty hard. Tanea, thank you very much. Interesting story, an important story today.